In today's video, we're going to take a look at a stock that I think is setting up for a nice swing trade, and that's Bally's Corporation. We'll look at Bally's on a weekly and a daily time frame chart, and we'll compare and contrast it with some of its competitors as well. Now, starting first with the weekly time frame chart, I'm going back more than 20 years so we can see from when it first IPO'd back in 2019 what price action has done inside of Bally's. Now, the thing to point out is since about 2021 or mid-2021, I should say, August, we can see this bearish trend that has persisted. That has lasted through 2022, 2023, and now for the first time with this most recent week's closed, we've seen that trend has now switched from red to green. We can also see the transition phase right here, which has lasted from about December of 2023 till basically right around this week, this most recent week, March 18th of 2024, where a lot of just back and forth chop. In this chop, we've seen that bullish momentum switch with the 3 EMA crossing above the 8. We've then seen the sellers try to bring price action down lower. And for 9 weeks, they were unable to do anything. And with the week prior to this most recent week, we saw the bulls finally take over control and have this breakout type of candle. And this most recent week maintained that price action. So this is where I think this trend is likely to switch to the upside. We also have a squeeze that's starting to form on the weekly time frame chart. And if I come into our daily time frame, on the daily time frame you can see that breakout very clearly, and it feels like price is likely to have this one more leg pullback back down to the market pulse, which is near $12.50. So that's the price level to keep in mind. And if we zoom out on the daily time frame, the other thing that stands out is 1, 2, 3, 4, 5, 6 edge signal confirmations, all telling us we're officially in oversold territory. So that's why I think Bally's Corporation is likely to pop. The histogram here suggests we're likely to see price at least pause for a little bit. It's the weekly time frame that's really telling us we think this trend on the longer term is likely to switch to the bullish side. This idea fails if we see price come right back down to below the market pulse and the market pulse flips to red. Now, one clue that I'm gathering from some of the competitors is what I'm expecting to see happen here. If we take a look at Monarch Casino, there you can see how that trend recently flipped and how prices feels like at least is starting to break out to the bullish side. Another competitor, Playa Hotels, same idea, but in both of these cases, we don't see as long of this bearish bias as we see in Bally's, which has lasted now for several years. So this is where I'm hoping that this trend switch is all the more effective and we're able to take advantage of a much better entry. Now, if we come into the options chain, there's a few things that stand out. First off, let me expand the 26 days and the 54 days to expiration, and we can start by taking a look at our current IV percentile. Definitely towards the higher end with an 88% current IV percentile, and you can see that reflected with our more recent term options chain here with a 98% implied vol. Now, in the 26 days to expiration, if you're looking to take advantage of this increased volatility, I think the 1250 puts look very attractive here. Selling the 1250 puts with 26 days to expiration has high open interest, earns you about a 1.47% return with 26 days, and a break-even price near $12.30. This was below that $12.50 price we were targeting, and I think is a way for you to take advantage of that time decay, take advantage of this increased implied vol, along with the elevated IV percentile here. Basically, the juicy implied premium and earnings is behind us February 19th, so you're in the clear from that regard. Now, another idea for those of you that like more of the covered call type positions, and this is a little bit, I think, less common to see, is selling the in-the-money covered call here with the 1250 strike, but with 54 days to expiration, where if you craft this position where you buy 100 shares and you sell the 1250 strike here, that gives you a break even near 1169, which is even better than the 1250 put, but you also have much more time and you're selling an in-the-money call, which I know a lot of people don't like to do. So two different options there, but in both cases, you'll see the 1250 strike is the strike getting the most attention, And it seems to be the strike where if you do get an entry near 1250, seems like a decent idea to play this overall weekly trend switch with the market pulse indicator and that momentum switch. I hope you found today's video useful. Take care everyone, good luck trading, and I'll see you on our next update.